As I'm going through stuff, feel free to chime in the chat if you guys have questions. What we'll do is we'll go through kind of a market review, and then we'll go through some trades that we took inside Kingline today. And then after that, we'll go through, today's kind of topic on the mentorship, because this is going to be, like I said, drawn out through many different episodes all throughout the year. So don't feel like, you need to learn everything all in one week, all in one episode. We're only going to cover a little bit at a time so everybody can kind of absorb it. And I will say, I say this all the time. Um, my models and my strategies are not, the holy grail. They're not one all be all strategies. Doesn't mean it's the only way to trade the market, okay? There's plenty of ways to trade the market, plenty of ways to be profitable in the market. It's going to come down to how you trade, how you manage your trades. But the models I'm going to teach you, the stuff I'm going to teach you about price delivery is just stuff that I've found really high probable over the years, stuff that I use every single day on stream with members. So, if you want to pick up a nugget or two from the stuff that I do, maybe you can add it to your toolbox. You're welcome to adopt my models completely as well. So I'm just going to share everything I know. I'm not going to gatekeep anything. And just, we'll go through this together. And I'll definitely do my best to help you guys every step of the way. So throughout the year. So ask what trade copier. So I don't trade copy anymore. I used to, but I don't anymore. Simply because, well, the firm I used to copy trade was Apex back in the day, but I got banned from Apex. So I know some people do use like Replicanto, and there's different ways to do it. You can do it Trade of 8 as well. If you want to copy on TradingView, there's currently no way to do it. But if you're on like NinjaTrader, you can do it. Or if you're just using the DOM on Trade of 8, you can group trade. I don't know. They just, there's a handful of us that got banned. It was like they gave you that letter of doom. No evals allowed. So I'm not able to trade Apex. Not really sure why, but primarily the firm I use, guys, is Take Profit Trader. That's the one firm I really, really trust. Top Step's right up there, right under them, in my opinion. Take Profit Trader offers, I think, the best bang for your buck and best all-around experience for getting payouts. So I trade them pretty much exclusively. I do have some Top Step, do trade live as well, so kind of a mix. Yeah, I haven't had any issues with Top Step payouts. I just prefer Take Profit just because I like the way that you get that daily, same-day withdrawal, and it's no hassle. I know that I don't have to wait 3-4 days to get my money. I don't have to worry about my payout being denied. It's just really nice, and I like being able to trade on Trade of 8. Like my Top Step's Top Step X. So yeah, we'll just do a little bit of a just chill and chat for a second here while the market's kind of delivering, answer some questions, and then we'll go through our market review. So one, when we have multiple fair value gap, please see yellow box. What is a good strategy to pick that one of the highest quality probability? Yeah, it's a really good question. A lot of people ask that question because there's plenty of fair value gaps all over the chart, right? Doesn't mean you want to use them all. Real quick, I'll answer that question. Short gone one night. I do use a cash account as well, but what I can do is I can leverage TPT. Right, it's pretty much really, really cheap leverage to trade, and I could deploy my cash capital in other places as well. So I don't have to leverage up with my cash account. If I want to leverage up in TPT, I can, and all I have to do is sacrifice that 20% split, and I can also have 5 accounts. So I essentially can get 5x the leverage and still withdraw 80%. So as long as props are around, definitely going to take advantage of that cheap leverage. Of course, not all of them are trustworthy, right? Because obviously many of us have been rug pulled by different firms. So that's why, when I take profit, it's one that I could rely on. I've been trading them for years. I've never had a problem. So anyway, back to you, Juan. The fair value gaps. So yeah, you're going to see fair value gaps all over the chart, right? Now, I like to use the 5 and 15 minute essentially as my main order flow guide. Now, of course, paying attention to higher time frame is really important, right? 1 hour, 4 hour daily. Now, I trade primarily on the 1 minute chart as far as my executions go. So when I'm trading on the 1 minute chart for executions, I'm using the 5 and 15 minute order flow for the most part to guide me on my next draw on liquidity, because I'm essentially trading a new trade, potentially every hour, potentially every 15 minutes or so. If you guys will trade live with me, I typically will trade anywhere from, I don't know, 5 to 15 trades a day throughout the whole day, right? So the 5 and 15 minute are kind of the most important to me on fair value gaps. So the main thing with fair value gaps is you want to see where are we delivering from. Okay, so that's one of the main factors there. And any fair value gaps that are paired with time levels, so any fair value gap that is kind of right around a really important time level, okay, those are kind of the biggest, most important fair value gaps for me. And then you can also take it a step further and say fair value gaps that are right above highs or right above lows, right? So for example, today, this 15-minute SIBI, right, was sitting right here above all these highs. So this is a fair value gap you'd want to have marked, right? Because it's sitting above all this liquidity. If we come up here and reject it, now we can look for some sort of inversion or wait for some close below a really important time level to confirm the delivery from here. Now, since we're delivering from here, this becomes my line in the sand, right? So I would prefer to see this continue to work if price were to keep coming back up into it. And if this inverse, then it becomes an important inversion because price is delivering from this SIBI, okay? Other important fair value gaps can be ones nestled right around key time levels. So this is a 15-minute. So on the 5-minute, see we're delivering from the 15. We get this new 5-minute fair value gap that also inverses these. Price comes back, retraces into these, and pushes right down through New York Open through midnight. So for me to get more bullish on the day, let's say we rewind time, right? We're back in the beginning of the day here. We don't know what's going to happen yet. I would, during this time, this fair value gap is extremely important to me. This one right here. Reason being is because it's nestled with midnight open, which is, in my opinion, one of the most important levels on the chart, and New York Open, probably the second most important level on the chart to me. So these really important levels right here, nestled with this fair value gap, are key, because if this gets inversed, now we can use this as support for potentially longs, right? Vice versa, if price were to come back up into here, I'd like to see those reject that SIBI. You can kind of follow that logic all the way down, right? Now we have this 5-minute. This is where we took a short this morning on stream. This 5-minute got tested, we went short, target a new week opening gap. Now we're seeing that price is delivering from this 5-minute, right? So now this fair value gap becomes important to me, because now I want to wait and see. If we inverse this, I can start looking to be bullish, like I was talking about this morning after we took this short. If we inverse this, then I'll start turning bullish. Otherwise, we have to be patient, right? And you can also take this down to the 1-minute chart. Like PM open here. You got this SIBI right on PM open. So that's a really important SIBI right there. That fair value gap's important. Because if I see price coming back up, I'd like to see that fair value gap hold right there with PM open, right? And if it inverses this, now I can look at this fair value gap as a high probable inverse, right? Someone doesn't have audio. Okay. Do I do one-on-one calls? I do not do one-on-one calls, simply because, one of the reasons, we even started Kingline as well, is that we're pretty much giving it all out, everything in Kingline. So we don't upsell mentorships, I don't upsell courses, I don't upsell masterminds, I don't upsell, I don't gatekeep anything. So anything that I trade, anything that we teach inside Kingline that's made us successful traders over the years, we just give it all out through every stream, through every mentorship video, and it's just all included. So I'm always happy to answer questions though. Like if you have a specific question about anything, I'm real easy to find. So, I'm always happy to go through that with you, especially on stream. I stream every single day live. So if there's stuff you want to work on yourself, talk to me during the live streams and we can go through that kind of stuff. I have no problem helping you out individually while on stream, so everybody can kind of, take part in that as well. So anyway, let's kind of go back through the market a little bit today. Again, we'll be going through a lot of stuff. If you don't understand some stuff that I talk about, don't worry. Okay, we're going to go through everything over time. Okay, it's going to take time. I'm sure a lot of you guys already have models and strategies you might already be trading, which is great, which is fine. I'm not trying to convert you to any type of model or trading strategy or anything like that. But what I'm going to do is just share, like I said, everything I know, everything I do, and maybe you can pick up a nugget or two. And if you decide you want to take the next step and come trade live with us, you know where to find me. Our room's only $24.99 a month. It's super affordable. We even offer cash back, 5% cash back on TPT accounts. So you buy a couple of those, you get the cash back. You're pretty much getting paid to be in the room. But I'll do this entire mentorship free. So even if you don't join, you can find me here every time we do it. So anyway, let's look through this review of the market today. Okay, let's see how price delivered today, and we'll go through some of the trades we took on stream. And if you guys have questions about some of the delivery, just ask. And if I miss your question, just ask it again, because there's sometimes I miss stuff. So anyway, we talked about that 15-minute SIBI, right? So price came up, all this liquidity from yesterday PM session and all Asia session, going into London. All this liquidity was just sitting here right below this 15-minute SIBI, right? So when we see price come up, now it doesn't mean you have to start immediately taking a trade, right? As soon as the market opens, you don't have to take a short right off the 15-minute SIBI. You can, you certainly can, but you don't have to. What you can do is, like I always tell people, is I like to, put pieces of the puzzle together as price is delivering. The more puzzle pieces you can put together, the more high probable is, the trade that you're going to put on is. So we get this 15-minute SIBI, again, really important SIBI on the 15-minute. And when I say SIBI, it just means bearish fair value gap. And if you don't know what a fair value gap is, it's a 3-candle pattern. You see how this candle, there's 2 wicks, they don't overlap. There's just this gap here. Versus like you see on these candles, there's 2 wicks, they overlap, there's no gap. So there's your gap. So that would be your fair value gap. Since it's a bearish candle, that would be a bearish fair value gap. Price will often want to retrace to these. Yeah, or imbalance. You can call it imbalance as well. And reprice orders in here to continue delivery, right? So we have this 15-minute SIBI, like I said, sitting above all this liquidity. So this is a really important SIBI. So we see price right at the open, right at 9:30, pump straight up, tag into that 15-minute SIBI and immediately reject, right? And then what happens as soon as that rejection occurs? We get this 15-minute BISI, so bullish fair value gap, that gets completely invalidated, right? So right here, I immediately have 2 pieces of the puzzle. So before I'm hopping on stream, I usually hop on stream around 10 o'clock. So before I even hop on stream, I'm putting all this together. So when I hop on stream, I have a plan for everybody, right? We get this rejection. We get this inversion. I have 2 pieces of this puzzle that price is looking bearish now, right? We swept all this liquidity out. Right. So all this liquidity is taken out, rejects there, no respect of the bullish fair value gap. And then the next most important thing I'm looking at is midnight, right? Midnight and New York Open are really key time levels in the market. So New York Open is 7:30 a.m. open. Okay, so this is going to be throughout the mentorship. We're going to reference New York Open very, very often. Okay, so that's a 7:30 a.m. opening price. It has a really important relationship with midnight open. Nice, pew pew. You should get it, man. I think price wants those equal lows way down there. I don't know if we get them today, but so this 7:30 a.m. open is a key level. Now, a lot of times you'll get New York Open a little bit more spread out from midnight, but one really high probable model you can look for is if you get a 15-minute close through New York Open, you have a very high chance. Yeah, 7:30 a.m. Eastern time. In fact, anytime I reference time, we're going to be talking about Eastern time, New York. So I recommend you set your charts to New York time. I'm in San Diego, but I put, my charts are in New York time, right? So yeah, 7:30 a.m. And anytime you get a 15-minute close through that, now it can be bullish or bearish close depending on where midnight's at, right? It closes through New York Open, you have a very high chance that midnight's going to be retested. Now today it was really close to midnight, so obviously not a lot of room there to react, but a lot of times, you get, maybe New York Open might be up here, right? This might be New York Open, midnight right here. You get that 15-minute close below New York Open. You can look for turtle soups off of New York Open, or some sort of entry model to target midnight open. That's essentially when I target midnight. If we don't have that 15-minute close through New York Open, most of the times I won't target midnight until I see that happen. So we see that 15-minute SIBI rejection, and then this 15-minute SIBI or BISI get invalidated, right? And then we knife all the way down here and close through midnight. So this is when I hopped on stream. So if we change down to the 1-minute chart here, let the indicators load up here. Yeah, Don, don't worry, we'll go through that. Indeed. Okay, so here's our midnight right here, and here's our New York Open. So price tried to respect it at first, ends up failing, right? So now I officially have 3 pieces of the puzzle I put together before I even take a trade yet today, right? Before I even hopped on stream. We got this 15-minute SIBI rejection. So where is price delivering from? That's a clue we always want to look at in the market. It's delivering from this 15-minute SIBI. That's its swing point there. It's invalidating these bullish PD arrays, invalidated that 15-minute BISI, and now it's not respecting midnight either. So there's 3 signs to me that price likely wants much lower prices, right? So when I see these time levels close below, now I'm essentially looking for, okay, where is price going to head to now, right? We have liquidity here. You can mark out any of these lows. These are all relative equal lows, right? These are the equal lows that we were trying to target yesterday. So price closes below midnight, seeks its liquidity, takes all that out. And again, at this point, I'm telling everybody I'm not bullish at all until we at least get a 5-minute inversion back up through those key time levels, right? So after seeing all that, we want to make sure we have this marked out. This is our fair value gap that's nestled with time levels. Okay, you'll hear me talk about this very often. Midnight, New York Open, inside this SIBI. So if price were to come back up in here, I'd look for rejections until it tells me it's not going to reject, and then we inverse this, and now I can turn bullish. So until we inverse that around midnight, I'm essentially going to remain bearish, right? Does that mean we can't take longs at all during the day? No, not at all. It just means overall, I think the net draw on liquidity is going to be lower, right? So we took this short here, targeted, took this short here, targeted new week opening gap. I know a good amount of you guys caught that with me this morning. Nice little short there. Now, new week opening gap is also a really important level you want to have on your charts. It's where we open up on Sunday from our close on Friday. Price often likes to gravitate towards new week opening gap. It can also be used as like a support and resistance level. So when we went short from the 5-minute, yeah, it's being recorded. We target that new week opening gap, and then I'm just essentially taking it level to level, right? Because now we push from it, come back up. This is that 5-minute SIBI. Price comes up to that 5-minute SIBI, rejects it again. Some of you guys also caught this short. I sat this one out. I took this one, sat this one out. And delivers us right back down to new week opening gap, right? Now, when we started to displace below new week opening gap, the first thing I'm going to do is look for potential spots where price could stop, right? So, and again, I trade on the 1 minute, so I use the 5 and 15-minute PD raise the most. So I was switching to the 5-minute time frame. Like, I'm looking to the left over here. This is something I recommend you always do below key levels, right? We got this new week opening gap. I'm looking to the left. Is there anywhere in here that's a area of interest for me for price to potentially stop? Okay, so we got this 5-minute BISI right here. I drew that out. And as you can see, price tried to use this as a floor, right, for a while today. So when we have that drawn out and we see this kind of action here, we can kind of assume that this will be a floor until it's not, right? Now going down into this 5-minute gap, we're already below new week opening gap, coming off a bullish PD array. Now this is where I recommend being really careful with shorts. Even if the draw on liquidity is much lower, you never want to chase shorts into a bullish PD array after a sell has already occurred, right? So that's really important, to always pay attention to. Now we're going to go into, DTT routes and how I use them and stuff like that in other episodes. I'll mention them today, but again, I don't want you to overwhelm you guys. Yeah, so when I say PD array, I'm just essentially saying, high points of interest in the market. I only use fair value gap and inverse fair value gap for the most part. I guess I use mitigation blocks too, but I don't use breakers in the sense that, the way they're typically used. I don't really use order blocks. Doesn't mean you can't, doesn't mean they don't work. Lots of people use them successfully. I have no hate against them whatsoever. I think they could be great tools. But for myself and my high probable models, I just found that time, fair value gaps, and inverse fair value gaps are everything to me. So we see this happening coming off this bullish fair value gap, right? And the 1050 macro. So if you guys are aware of macros, it's the last 10 minutes of every hour and the first 10 minutes of the next hour, right? So it starts at the last 10 minutes and it ends at the first 10 minutes. So typically an hourly candle is going to do a lot of repricing the last 10 minutes, right? And then the first 10 minutes, it'll either potentially start to create that wick or finish that wick off. So when we're going down into 1050, we took a long here, coming off of this 5-minute. I don't know if you guys remember this long we took, but we took a long here, coming off for the 1050 macro. Because at this point, like I said, even if my draw is lower, I'm assuming that the macro, more likely than not, is going to want to reprice new week opening gap, or at least stop people out that are on the right side of the market. Macros tend to do that, and we'll go through price today and see how that played out, right? And I'll tell you guys, different macros have different price signatures and tendencies that they like to do. This is also something I've picked up over the years. You got it, Pew Pew? Let's go, man. Good to have you back, bro. So that 1050 macro, we took long, coming off this 5-minute, just to reprice new week opening gap. And then price ended up just kind of sitting in time distortion from that point forward. So it didn't really do much in here. Again, my draw was still, I'm leaning lower on my draw as well still, because we still haven't inversed this really important 5-minute civvy. So I'm still assuming that any push up here, until it shows me that it's going to inverse a fair value gap that we're delivering from, the price likely still wants to go lower, right? And also this is where the higher time frame can come in handy, right? Pull up the 4-hour. What are we looking like here, right? We have this potential sell model in higher time frame in play, right? It's the same thing how we broke it down on the 5 and 15-minute chart. You got the 4-hour chart. You can look at where is price delivering from right now, right? On the 4-hour chart, it's delivering from this large civvy that was created, right? Because that's where price rejected. That's where price is delivering from. Now, when can you confirm that price is delivering from a fair value gap? Well, there's a couple ways. You can do it through, close below a low, or simply inversing a fair value gap on the opposite side of the market. So we rejected here. We inversed both these 4-hour gaps. We closed below here, the candle body. So that's telling me that we are officially delivering from this 4-hour civvy, right? So that means right now, for the time being, I'm bearish on the market until we inverse back through this. Now, where are we bearish to? Well, I'm assuming my draw on liquidity overall on a higher time frame is all these relative equal lows down here, right? It doesn't have to hit all these equal lows. That's just what I think the draw is overall on the market. So when we see this delivery, I'm going to assume that that's going to be the overall higher time frame draw. So when we break this down further on the 4-hour, we draw out this civvy that was also created, right? Price comes up into it. This was yesterday. and rejects this as well and inverses this. So now we're delivering from this 4-hour gap. So for me, I'm going to remain bearish on this market, higher time frame, until this 4-hour, the one we're delivering from, is closed back above, right? Inversed. I'm assuming it's going to go for these lows at some point. So knowing my higher time frame draw is still likely lower, and our lower time frame for value gaps are being respected, I was looking for shorts in here. Now on stream we took another short here. I took a short at the CE of the new week opening gap, which was right here on this price moving up here, and I ended up adding a little bit more, and this was a pretty nasty inducement, closed through those roots, even inverse this. I took half my position off for a small loss, but left half on, saying I think this is likely just an inducement, but of course I need to manage my risk, right? And we're going to talk about that. So I left some on and waited to see, how price reacted coming back down to new week opening gap. We stayed in the short, came back through, we inversed this, and we held that short, I believe all the way down to these candle bodies. So that was nice. Nice short there. And that was kind of my last trade for the day. Had about a 2K day. That was kind of it. Then price just kind of been doing its thing, but we can keep going through just to walk through the market here. So closing back below new week opening gap. Again, it's trying to hold this 5 minute. We have the 1150 macro that delivered us here on that short that we were in. Now you got to keep in mind too, the 1150 macro, more times than not, is actually a bullish macro. Typically it's bullish. It's typically a bullish macro, regardless on the draw and liquidity. Today, thankfully, it worked out in our favor to continue to sell and push price lower. But more times than not, you want to be careful shorting into this macro unless you have really, really good confluence on the draw and liquidity. But again, this is the last 10 minutes of the hour. As you can see, like on here at 1050, price really delivered here, right? Same with 1150, price really pushed, really delivered here. And then price just continued to kind of time distort going into lunch. And then we get this push up here. Which on the 5 minute was pretty tough to do anything with. Didn't really get a lot of clues here on the 5 minute to really take a long. On the 1 minute, I wasn't trading at this time, so I'm just kind of breaking it down here. You do get this little fair value gap you could have used. Probably not one I would have taken though, honestly. You do get an inverse here, nestled with a time level. So that would be your key clue right there. TMSO is also a really important time level. That's the Q2 opening price of every 90-minute cycle. So that's a very important time level that we use to gauge order flow as well. Closing above it, inversing a PD array around it is really high probable. So you could have just sat out this long though and just waited, right? You could have just waited, sat out this long knowing that the draw is likely still lower, not engaged here, which is fine, and then waited for the potential short setup. Now where would you wait to short? Well, if price is pushing up here and you're already seeing this and you missed out on this long and you didn't catch it, you don't want to FOMO into it. It would have worked. You could have FOMO'd into this long here. It would have worked out. But a lot of times you try to FOMO into the trade like this, you'll get wrecked. You're better off, assuming your draw is still lower, just letting this long play out. You guys will hear me on stream all the time just saying, well, I think the draw is higher. I think the draw is lower. I'm just going to let this trade, let price just play out. I'm going to wait for the next setup, right? You don't have to catch every single move. So when price comes back up, what did we just talk about with new week opening gap? It acts as a support and resistance level, right? So we just push all the way up into here, take out all this liquidity. Price then rejects that 1034 root. Again, we'll get into DTT times later, so don't worry about that right now. But we reject that 1034 root, and we get our PM opening print. But before that, we have our 110 macro. So this is the one of the macros throughout the day that's not at the end of a hourly candle. So 110 to 140 has a very, very unique signature. And if you are in Kingline, you know all about this. This is something that happens, I would say, 9 out of 10 times. Okay, between 110 and 140, price is going to do one of two things. Price is going to run engineered low resistance liquidity. Okay, now when I say low resistance liquidity, I'm just saying higher highs or higher lows. So you can consider this right here, low resistance liquidity. Okay, now price already ran that liquidity before that macro started. So the other signature that this macro will do will create its own low resistance liquidity and then run it after 130. Okay, this is, I'm telling you, it happens. If you can go back test this if you want, go pull up any day. More times than not, you will see this macro run liquidity that's engineered or create it and then run it after 130. So this ends up creating it. So what are we creating here? Low resistance liquidity, right? So when I see this type of signature, and I know what this macro is likely to do, you can take a very, very nice high probable short. Now you don't have to time the top here. Like, you don't have to soup this time level. You can wait for PM open to print. Okay, you can wait for an inversion. Any sort of clue that's going to tell you that price is now going to come back and take all this out after 130, right? And if you're in Kingline, you can go to the left of the Discord, click JD Time Hacks, and read about this trade, of how this trade plays out. So we get that low resistance liquidity made within the macro. Price rejects 1034, this the middle of the new week opening gap, and we get that PM open print, which is 130 PM open. So that's another really important time level for your charts. It's the 130 opening price. Okay, so that price is going to act very similar to midnight open, but for the PM session. Okay, so it's a really key time level in the market. So price immediately prints that 130, and what do? Create this imbalance and run all that liquidity that was made during that macro. Yeah, it applies for longs too. So what you could sometimes see in this macro is, let's say instead of it stair stepping up during this macro, let's say it did this, right? It could be stair stepping down, and then 1:30 PM open prints. You get something like this. So this would be the opposite signature. And you got your PM open. Let's say PM open was right here. Yeah. So you can see that it dipped down, closes back above PM open. You see it hold here. You can assume that that liquidity will probably get ran. Okay, just like it did here. I really invite you to look into that time period. It's pretty interesting. So that ends up playing out. Looks like we come down all the way back down to this 5-minute BISI. Price ends up completely losing it, and now we're headed towards the higher time frame draw, which seems to be down here. Now, how do we determine whether a macro will be a reversal or continuation? That's a really good question, Waffles. So that is going to come down to, again, building those puzzle piece clues, right? So with this macro, you can say, well, how do you know it's not just going to keep going up? Well, I don't, right? I don't know anything for certain, right? I don't have anything that's guaranteed in the market. However, I know that the signature is highly probable. And if price is still bearish on the day, right, we reject this 1034. Remember, you don't have to catch the top of this. I do like the turtle soup a lot, but you don't have to turtle soup. You don't have to catch tops and bottoms by any means, right? So for today's reference, instead of just trying to time this, just guessing that it was going to short here, you could wait. You can wait to see what happens after we hit that 1034 route and after PM open prints. And remember, in the back of your head, the signature of this macro more times than not. Again, nothing's guaranteed, but we know the tendencies of what this macro likes to do. You see that rejection, you see that PM open print and close below. Now you're thinking, okay, this is worth a short for me now. I could take a short here. I can stop with a close above 1034. So, you could even take a short after this candle close. Have an 18-point stop or so. And you can target all the liquidity of the macro. And of course, we use time levels in here. You can target the time levels, right? 1235, TMSO. These are great levels to target. So that's essentially the delivery of the market today. Just going through different puzzle pieces and higher time frame, fair value gaps, new week opening gap. Now we're going to go over, like I said, a ton of stuff throughout this mentorship series. We're going to be going over, how to take time level trades, when to take them, how to manage your stops, when to put your stops at break even, when to choose targets, how to choose targets, when to average up, all these type of things. Okay, this is going to be a drawn out series, so we don't need to learn it all today. I don't want to overwhelm you guys, but every day we do the mentorship, we will at least go through a market review like we just did, and then we'll go into a lesson for that day. Okay, so today's lesson is essentially going to be nothing to do with price at all, because before we get into this mentorship this year, if you guys really want to be successful, you need to listen to everything I'm about to tell you, because I can teach you all these models. I could even be some wizard, and I could tell you, hey, I know exactly how the market's going to deliver every single day, which I don't. But let's say if I did, and you knew this information, you can still screw it up, right? If you don't listen to what I'm about to tell you about risk management. Okay, that's the absolute king of the market, of being successful. So what do people say when they say risk management? What does that even mean, really? A lot of people have different terms on it. Now, there's a lot of talk on X. Now, again, there's plenty of great traders out there. I'm not saying everybody doesn't know what they're talking about. Lots of people do. But there is a lot of talk out there that I would not recommend listening to as far as risk management goes. For example, you've probably seen that graphic that's like, oh, if you make just $250 a day, that's $5,000 a month. Could you use $5,000 a month, $60,000 a year, whatever? Yeah, sounds nice, but that's actually the opposite of how you want to approach the market, and the opposite of how you want to think about your trading. Okay, you don't want to just try to think in terms of, oh, I'm going to make $250 a day and make 5K a month. You need to think of it the opposite direction and think, okay, I'm going to lose no more than $250 a day. I'm going to lose no more than 5K this month. Okay, you need to flip it on its head, because I don't know about you guys, but when I first started trading almost 9 years ago, if I would have taken that logic and actually applied it, I would have saved myself some serious cash, some serious pain, some serious time. Okay. Now, does it mean you have to have a $250 daily loss limit? No. It could be relative to your account size, relative to your risk, whatever. But the key is that you need to have a daily loss limit that you absolutely respect, no matter what. Okay. No questions asked. There's no negotiating it. You hit that daily loss limit, you're done. Right? That account is done. Doesn't mean you can't keep trading the rest of the day. It just means you can't keep trading that particular account, because that's going to keep you in the game long term. Let me ask you this: has anyone blown an account this week? An eval? Anything? A funded account? Has anyone blown a funded account? You don't have to answer. You don't have to answer. But I'm gonna, a thought experiment, right? I mean, who hasn't, right? Who hasn't? So let me ask you a question. If you blew a funded account this week, and I could grant you a wish on that funded account, and you can go back in time and say, all right, I'm going to give you your funded account back this week. I'm going to give it to you right now. You're going to get it back. However, it's going to cost you $500 of drawdown in your account. Would you take that deal? Who would take that deal? You get the funded account back, but there's just $500 taken from it. But you still have the funded account exactly where it was. It's just $500 shorter. It's still yours to trade right now. You can trade it right now. I would do that deal any day of the week, right? Who wouldn't, right? So if you're telling me yes to that question, then it comes down to us in real time thinking, okay, when our account hits that max loss, right, of, let's say you have a max daily loss limit of $500, well, you have the power to grant yourself that wish. I mean, you could stop, you just stop it. You just stop your trading that day, and you need to zoom out and look at the bigger picture of the market, okay? You're not going to be green every single day. I don't care what you see on X. I don't care what people tell you about 90% win rate. I don't care what they're wrong, okay? I'm going to tell you, you're not going to win every single day. That's just not real life trading. The people that say you can win every single day and you can have a 90% win rate, what they're going to do is they're going to win 28 days of the month, and on the 29th day of the month, they're going to have a, 5K loss or something, 10K loss or whatever it might be, and blow the entire account, okay? What if the trade turns around and you're negative 500? Is that what you're referring to, Chance? Because this is a good question. I'm glad you're asking this, actually. So let's say you're in a trade and you're about to hit your daily loss limit, right? And Yeah, okay. So let's say you're in a trade, you're about to hit your daily loss limit on your account. Let's say it's negative $450, you're $50 away or so. You have a hard daily loss limit. It comes down, oh, okay, we hit that $500. Now you're thinking, okay, well, what if, like, man, what if I close this trade at a $500 loss and then the next candle rips 30 points to the upside? Let's say, let's say you were, long right here, right? This hit your daily loss limit, and now this happens. Like, oh, come on, man. Well, sure, this time that may have worked out, right? But trading is a game of mathematics. Now, did that work this time? Yes. There's going to be, let's say it worked 7 out of 10 times chance. 7 out of 10 times that daily loss limit, you hit it, and then price goes back up. You're like, oh, this is ridiculous. Well, the 3 out of the 10 times it's not going to do that. And the 3 out of 10 times it blows your account. Because now, let's say instead of this happening, you didn't take that 500. You're like, okay, well, the trade might turn around. I don't want to take a $500 loss. It comes up and huge 30-point candle down here, right? 50-point candle down here. Now you're negative $1,500. Now you're like deer in the headlights, right? Have you, I'm sure we've all experienced the deer in the headlights. It goes way against your stop, or you have a mental stop or whatever, and you're like, oh man, now I'm down so much I don't want to cut it, right? And now you don't know what to do. So if you get to that point, you've already lost, right? Now you're just hoping for luck, right? And hope's not a strategy. So if you want to be successful in this long term, and you want to keep your accounts healthy and have a positive expected mindset, you just respect your daily loss limit, regardless of what you think price might do if it goes below it. Okay? It's not fun, it's not sexy, right? No one wants to hit daily loss limit. But if you want to make money, you have to listen to me. You have to trust me on this, okay? And you can always just switch accounts as well, right? You can hit daily loss limit on one account, and then you can switch to a different account. If you hit daily loss limit on your live account or your cash account, switch to a funded account. You hit daily loss limit on a funded account, and maybe switch to a different account, right? But the bottom line is that account itself is preserved and protected. And you got to remember, next time you are close to your daily loss limit, remember the wish that you could grant yourself that, if you blow that account, would you have traded $500 a drawdown or whatever, $750 a drawdown to have that account back and not lose that funded account? If I can go back in time and make deals with myself like that, I sure would take them, So always respect that. Now, every account is going to be different. Every person is going to be different with your daily loss limit. Some people might have a 250 daily loss limit. Some people might have a 500. Some people might have a 1500. That's just relative to your account size, your trading, your risk reward, all those type of things. But the bottom line is you need to set one for yourself, and you just need to respect it. And look at the very, very big picture. Because if you zoom out over the course of a month, the course of 3 months, and you hit that daily loss limit 4 or 5 times, and you stopped at $500 throughout that whole month, well, you kept your account, and more times than not, you pulled out more green days, right? But you didn't lose the account because you respected your daily loss limit. So it's what Steven's saying too is really nice. If you can find a way to do that, you can find a way to set it in stone to where you, even if you wanted to, you can't change it. It's really good as well. Because you'll wake up tomorrow, and you wake up tomorrow like, oh man, if I would have just respected my daily loss limit, I would still have my funded account right now, right? You don't want to sit in that. You have to make some changes if you want to make some changes. And you often hear more bad advice you see on X. Just never give up. Just never give up trading. You're going to make it. Don't quit, right? Well, that's debatable, right? That's debatable. Again, it's mathematics. You can just never give up and never quit and just keep turning your wheels forever and ever, right? I hate to say this. This is just the truth. But you can never give up, and you can keep learning models night and day. You could literally, like I said, you can almost predict the market to a T every day. But if you don't get your habits in check of respecting your daily loss limit, it doesn't matter, right? You can just not give up and then just keep struggling. The key is to not give up, plus also apply the discipline and the lessons that you need to, be non-negotiable with yourself. and then not give up. Because if you respect your daily loss limit and then not give up about learning about how the market's delivering or learning about yourself and your psychology, but you always are respecting that daily loss limit, then you can persevere, right? Because then you can sharpen your trading. You can actually allow your trading to get sharper. Because your trading's not going to get, you can learn all the models in the world, but if you don't respect daily loss limits, you're just going to get lucky sometimes. You want to try, you're trying to get lucky more times than you're not. And that's how most people trade, right? So again, it's capping your losses, and then also the flip side of that is not capping your wins. Okay. Now there are times, doesn't mean you have to press the pedal all the way until 4 o'clock when the bell rings, right? There are times when price, especially during PM session, gets a little janky. It's not the most high probable, but I'm going to tell you guys some ways you can kind of still trade with that. But you don't want to be like, okay, I hit $250 today. Let's say your max loss, daily loss limit is $500 on the day, right? That's your set in stone max loss limit. Well, if you end every day at $250, like, all right, well, I'm done for the day. $250, I'm good to go. If you did that over and over again, well, you're kind of setting yourself up for potential mathematic failure, right? So it's okay to keep trading when you're green, okay? As long as you respect your daily loss limit. Because if you still respect your risk management, you can still take some paper cuts here and there and catch some really good trades, end up being up $750, $1,000, $1,500, right? Same with adding to winners. That's a whole nother part of something we're going to go over. Is let's say you made $800 in the AM session today, right? And you go into the PM. We know that PM is usually not the most high probable, right? PM's a little bit harder to trade sometimes, a little bit slower, sometimes a little janky. Well, what you could also do is you could size down in the PM even more, maybe just 1 or 2 micros, 3 micros, and then only average up and just keep trying to catch average up trades. So, if you caught, maybe you caught this long, right, off this inverse for a couple micros, you get a close above here, you're adding in the green, and every time you add in the green, you just bring your stop to break even. And then you only need 1 or 2 really good trades in the PM that don't come back break even and get to a target of you averaging up to make another $800 or another $300, right? But if you're starting really small, you're still preserving mental capital, right? Because you're trading the PM session, it's a little bit of a mess sometimes. You're still preserving your green in a way, and now you can average up into winners to try to expand that green. And every time you average up when you're in a winning trade, you basically have 0 risk in that trade, but you have more leverage. If you guys traded with me today, you saw me average up into the short. I averaged up 3 different times to increase my leverage on the short. Right here. It was in here. So I took this short. I kept adding and adding, right, all the way until we got the candle bodies. Now every time you add, you just bring your stop to break even. So when I added here, I think it was like right here I added, I just bring my stop to break even, right? Worst case scenario, you hit break even. Okay, no big deal. Still protected all your green, you're still protecting your account, you're still protecting the trade itself. Best case, you average up a few times and it delivers all the way down to your target, and now you just added a bunch more leverage going into your target. Yeah, exactly. So, that's a way you can kind of counteract. It's like, well, if you're scared of losing your green, well, lower your size and average up. It's another way you can do that. But the bottom line is to cap your losses, guys. So that's going to be, the basis of this mentorship before we get really deep into time and price models, which I can't wait to get into with you guys because I love the market. I'm passionate about time-based price delivery. I love trading. But again, none of these models are going to matter that we go over until you have that set in stone. And I know it's easier said than done. I know it's not human nature to accept a loss on the chin. But I'm telling you, until you can just give that a try. I mean, even for a thought experiment, try it for a few weeks and just see. If you have a $500 daily loss limit, it would take you 5 losing days in a row, right, to lose that account. Instead of you over leveraging and not respecting that daily loss limit for one day and it just gets blown that day, right? You would have to have 5 losing days in a row. And with the models I'm going to teach you, that's very unlikely. It's not possible, but it's very unlikely. So that's like kind of the basis before we get into anything else this year. Is I'm gonna pound that into your guys' heads to respect your daily loss limit. Okay, and now there's ways we can also talk about how to manage the trade itself and how to give yourself more of an edge, within managing that daily loss limit. But right now, I just want you guys to understand that the daily loss limit is going to be that's your holy grail, right? And again, it's not fun, but just remember every time you get close to your daily loss limit, please remember what I told you, that you either are about to blow your account or you can preserve that account today and tomorrow wake up and you still have your funded account just with $500 removed from the P&L, right? But it's still a funded account. You still have that account. You only need 1 or 2 trades and you got your account back where it was or higher, right? So, yeah, Steven, for sure, man. In fact, Steven was a king at showing us that daily loss limit all year last year. I remember from early 2024, it was pretty impressive. Trade Asia with size. I remember that. Good stuff. He killed it, man. I'm sure there are days, Steven, that you probably hit your daily loss limit and it's kind of frustrating, but I'm sure the day after you respected your daily loss limit, you probably printed. I guarantee you. I don't even know, but I guarantee Steven probably had a day or two where he hit his daily loss limit and the next day he just killed it. So, but he, didn't have that opportunity, didn't respect the daily loss limit, ended up blowing the account. Well, now you don't even have the chance, right? So, that's it. Yeah. Yeah, I think we all can. I think we all can tilt hard. I mean, all of us have gone on tilt. Everyone, right? So it's daily loss limit prevents that. People ask all the time, how do I prevent tilt? Well, get a daily loss limit, respect the daily loss limit. See, Abby? Now, would you take that deal, Abby? If you can have that account back? I bet you would take that account back for $1,000 drawdown taken out of it. Wouldn't you? Yeah. Now, again, it's not human nature. It's really hard in real time, right? We have emotions. We're human beings. We're trading with money, right? Even if you're not trading a live account, if you're trading a funded account, you still have put money into the market to make that account possible, right? So there's emotions involved. Anytime emotions are involved, that's when discipline has to come in, right? Because we're not robots. And discipline can be exercised just like a muscle in the gym. So you have to give yourself, if you're having a really hard time respecting a daily loss limit, the one thing I would recommend for you is to size down, first of all, and start learning to just respect it. So maybe if you're used to trading minis, maybe switch to micros. Maybe if you're used to trading 20 micros, maybe switch to 5. If you're used to trading 5, maybe switch to 2. And then find a daily loss limit relative to that sizing and just work on respecting it and then switching accounts and build that habit. And then I think you'd be pleasantly surprised that after you did that a few times, you end up making green trades after that. And you're like, oh, wow, that loss really wasn't so bad. It really wasn't so bad. And I still have my account. And now I'm green. And now I'm in profit. Right? Now, I can keep saying this all day long, but it's up to you guys to apply it. I can't go through the screen and click those buttons for you. But if you want to save yourself a lot of pain and misery, because of course you're going to have to go through some pain yourself. Everybody's going to have to learn from pain, but you can also learn from others' pain. You can also learn from others' mistakes, right? Of course, it's going to be a mix of the two, but I'm here to help you try to learn from my mistakes, and I've made every mistake in the book that you can think of. I've probably, early in my trading career, I've had losses that would make most people probably faint. Okay? So, trust me, I've been through it all. Okay? So you can try to learn from my pain and my mistakes as well as your own. Yeah, let's go, Steven. Nice, autistic, yeah. How do you get over wanting to short the market? That's tough, Kelly. I think all of us kind of have like a bias inside of us that like to long or short a little bit more than the opposite. But um, just understand that you can long and short the market all day long. You can play both sides of the market, based off, every hour you can kind of you fade me all the time. Well, sometimes you might be right, but yeah, you can long and short, all throughout the market. It's about, again, it's you got to put those puzzle pieces together, and the biggest thing is you don't want to, you don't want to chase price, right? Like you don't want to be shorting the whole, right, or longing the top, right? Especially into really important key levels. So again, you want to try to put those pieces together of where's price delivering from, where do I think it could deliver to, where's it rejecting, where's liquidity sitting. Try to put those pieces of the market together, and then try to just flow with price. Just remember, it's okay to be wrong. Okay, it's okay to take a stop. What daily loss limit do I recommend on a 150K? That's a good question. So I usually use around a $1,200 daily loss limit myself, but if I do that, I need to at least have more days than not that are $2,400 or higher. But I would say, yeah, $750 or so. Kind of depends on your risk tolerance. Also depends on your sizing as well. But I mean, again, it's all going to be relative to your account and your risk reward, your typical risk reward. Daily loss limit is going to be a little bit different for everybody. But I mostly wanted to instill that into you guys. So, Leo, that's a good question. I do use minis sometimes, but not very often, man. More times than not. So if I'm trading my live account, it's always micros. If I'm trading TPT Pros, almost always micros. If I have a huge buffer on a TPT Pro, maybe I'll trade minis sometimes. Top Step, I'll throw minis on the chart. I have less attachment to Top Step, but cash account, take profit trader, really valuable accounts to me. I trade micros. You can make plenty of money with micros, by the way. I'm up over 2K today. I didn't trade anything but micros. I try to make daily loss limit equals or less than just half my. Yeah. If your daily loss limit is $500, ideally you're making around $1,500 on good days. At least 1,000. Yeah, John, $1,200 with 3 micros. Totally. A lot of people's main problem is, obviously not respecting daily loss limit and then over leveraging, chasing price. Those are the 3 killers. Yeah, your daily loss limit needs to be at least less than what you make on average, for sure. Exactly. Nah, D3, you don't need to size up, man. Good, $780 today with your 50Ks. Killed it, bro. See, that's great, John. So even with taking 2 losses, yeah, I took what was it, like back in here? Remember, I took that loss. I cut half my position off on the short. I took like a $340 loss on this, but my trade ended up making almost $700. It was like $650, right? It's okay to take losses. It's another thing, don't be afraid. Don't be afraid to take losses. Your setup's there, take it, manage the risk. If you have high probable models, which we'll go into over time, more times than not, those trades will work out. At the very least, you can protect that trade. Once it hits a certain PD array or a certain higher low, you can go break even. Yeah, fear. So, break even is a double-edged sword. If you go break even too quick, it can go against you. It can tap your break even and continue in your direction. But if you also don't protect your trade, like let's say you're counter trend trading, like let's say, where was it? Yeah. So let's say, oh yeah, in fact, we took this. Remember, you guys remember we took this long. This was a Q3 long. We took this long coming out of New Week opening gap. Remember, I was trying to target this 1 minute SIBI. I don't know if you guys remember that. I took a long here, and I told you guys, hey, I'm trading against the trend here. I still think the draw is lower, but I'm trying to trade one more manipulation move back up this just as a scalp. And told you guys, as soon as we take this high and we tap into this PD ray, I'm going to go break even, right? Because the reason why is because we're delivering into a bearish PD ray with bearish order flow, right? So when I see this and I'm long and I'm in profit, I was in profit like I was like in the middle of this candle, about 45 points or so, and we're going into this bearish PD ray, and I'm counter trending the market. That's when I would put my stop at break even, because either it's going to deliver to my target, or I'm just wrong and price is going to continue towards a draw. This manipulation move was just short-lived, right? So I typically will go break even after price has either swept liquidity, taken a high, or tapped into a bearish PD ray like that. So that's when I would protect a trade, and it got me break even, right? But no big deal. It'd either been a nice scalp or free. Nothing happened, right? So yeah, markets closed on Thursday. Yeah, tomorrow should be normal. So, but yeah, guys, that's pretty much it for today's session. I know it wasn't super technical, a little bit more psychological, but I wanted to go through the market with you guys, just the delivery today on the market, some of the trades we took inside of Kingline, and just go over what I think is the most important part of trading, and that's your psychology. Yeah, Ben. But those that are in, Kingline, I'll be trading live tomorrow, just like every day. And if you're in here as a guest, you're always welcome to hang out and join these mentorships. They'll always be free. I'll never charge for them. And we'll be going through a lot of cool stuff. So, any other questions, guys, before I sign off? This was recorded. I will post it in the 2025 class section for you guys to review later. So if you're a free member, it'll be in there for you to view anytime in the future, and that'll go with all the episodes. And yeah, membership's only $25, $24.99. We literally try to make it at this point pretty much free, but we need to have some sort of barrier of entry so we don't get a bunch of spammers and a bunch of riffraff in the room and all that kind of stuff. Plus, if you buy like a couple TPT evals with our discount code, with the Kingline promo code, you get 5% cash back on that. So it only takes a few evals, and it pays for your membership. You get that back in cash. So I would say probably 80% of this room gets a free membership just through the cash back alone, right? How do you calculate consistency? Well, consistency will naturally mathematically work itself out as long as you have that daily loss limit respected and you have, high probable trading models in place. So you don't need to worry about being consistent on a day-to-day basis by being green every day, essentially, is what I'm saying. Because again, you can have someone with a 90% win rate be very unprofitable, and you could have somebody with a 33% win rate be very profitable, right? So consistency isn't really everything. It's more so about the consistency of following your rules, right? So if you're a 90% win rate, you could win, like I said, 15 days in a row of $100. Perfect win rate, right? Not a single day was red. And then on that 16th day, you take a $2,000 loss and you wiped out all your green and more, right? So that 90% win rate person is now unprofitable. So you want to have just consistency in following your rules. Tony took that, let's see, 315, 345 macro. Nice, man. Yeah, it's a good one. We'll be going into that. We'll be going into that a lot. Yeah, it's not just you, Joanna. Trust me, it's a lot of. We've all done it, and we've all been there. I mean, ask me how I know these things, right? So, and again, that's just going to come down to not capping your wins and just capping your losses, and then finding a good trading model that really suits you. I'm going to be very happy to help with you guys with all of that. Sometimes you add aggressively, you go from 3 micros to 20. Is that something you recommend to do? I mean, that depends. That is a strategy I use. I do like it, but again, it's very calculated. And we're going to go into this as well about trade management. This will be another part of a different mentorship section. But we'll be going into how to scale into trades, how to scale out of trades, how to average up, when to add, when is a trade invalid. Like if I add to a trade, it's essentially I'm still only adding if that trade is still valid. So if the trade is no longer valid, I I wouldn't just add for no reason, right? I would add strictly based off if it's hitting a time level or a PD array and a time level. Let's say I threw on a few micros just in case price decided to just run without me. But more times than not, like if you stream with me, if you trade live with me, I usually tell you guys you can use me as like your first level risk sink. So I could kind of take that heat for you guys, and then when I do my ad, you can take potentially your first entry, or look for potential confluence with that ad. So yeah, we'll go into all that as well. How do you make sure that the fair value gap is an actual fair value gap and not inversing after you took it? Well, I mean, you never know for sure, right? Nothing is ever guaranteed, but a lot of that's just going to come down to time. All right, time is going to be the factor there. So if there's time levels around that fair value gap, if there's an inversion, so like look at this fair value gap here, right? So obviously price is already pushed extremely down hard, right? It's probably not wise to look for shorts in this area, right? Because what has price done? I mean, it's been selling since 1:30 p.m. all the way down here. It's probably not wise to look for shorts here. And again, this would be one of those things, if I was streaming trading, I'd be like, look guys, this thing can melt for another 100 points. I don't care. I'm not going to take a short here. I'm not going to chase and short the whole, right? So going into Q3 here, this is just a high probable model. You get this inverse fair value gap. These both get invalidated. You have this fair value gap. This could be something that could be a high probable fair value gap. You got two inverses here, right? You have I don't know if you guys use stat map, that's a whole other thing, but you have a time level in here. Pretty tricky though, because it did come back and inverse this one, but this is the key one here. This is the one that made these inverses. So like if you took this fair value gap long, your stop could be either a close below this fair value gap, or not respecting this last little one here. But we'll go into all that stuff in much more depth in different episodes. But today was mostly just about psychology and something that I really need you guys to understand. If all this work I do teaching you guys all these models and stuff, in the future, it won't even matter if you guys don't put into practice what I'm teaching you today about your risk management. And again, risk management is thrown around on X all the time, but the key factor is that daily loss limit. So all right, guys. I hope you guys had a good day today. It was fun hanging out for a while. I will post this in the chat, and I'll announce the next episode. Okay, we'll probably do like 2 a week. Just kind of depends. It'll just be random, but I'll always announce it in the chat ahead of time so you guys know. And if you ever miss an episode, it's no big deal. I'll always record it for you guys. It'll always be thrown into the chat, so you can always reference it if you miss it or you want to go back through it. This one was, I told myself I would not do anything over an hour for this mentorship series, and I already broke that promise, so I talk too much. So going forward, I'm going to try to keep them around 30 to 45 minutes and just do a lot of them, so it's easier for you guys to back reference them. It's easier to digest that way. Quick question, where would you enter and look to exit on this move? Good question. So if I went long, it would have definitely been from this inversion. I would have liked to take this inversion here. If you miss this inversion, I do have a really high probable model called Q3 inverse, and if you're in Kingline, you know all about it. But Q3 is a very important time zone on the chart. You get a inversion made inside of Q3. It's really high probable. So this little inversion right here could have been your second chance. So you could have seen this inverse and went long here. And then as far as targets go, well, you have this low resistance liquidity. You can kind of look to get ran. So you can target this high, right? You take out that high, you can put your stop to break even, and then try to collect some more. Maybe back up to this old low. Just important levels like that. I probably would have taken it off at this high, based off time of day and stuff, going into the bell. I know, Parvez, same thing. All-in-one indicator. Good question, Morpheus. In fact, I'll include that in one of the episodes. We'll go through the indicator, because inside of Kingline, there's so much talent inside our room, man. Not just the traders, but people that can make indicate. We have everyone helping out everybody with indicators, with everything. Ravage and Box made a really cool indicator. For those that don't have like a premium trading view subscription, it literally has like 10 indicators all in one, and you can customize it based off whatever indicators you want to put onto it. But yeah, I pretty much keep all the time levels, just Q3. I usually get left out when you average up and then get stopped out break even, but my trade is still in the original price. How do you suggest for me to manage that trade? Good question, Charlie. So if I average up, obviously that brings my fill much higher, right? And I have a much higher chance of getting break even. If you don't average up, you can just keep your trade managed based off your original entry, and I would just put your break even there. Especially if I've averaged up, it's probably after a point it's invalidated some sort of level or PD array. Like if I would have averaged up on a long here, like let's say I took this long here, and all of our entries were like right around here, and let's say I saw this inversion, I saw this wick, and I added more long here, probably bring my stop to here now, right? So now you have this inversion to protect your original entry, so I would just keep it break even at that point. That's what I would recommend. All right, guys. I will ping you guys next episode, and hope you guys have a good rest of your week, all right? All right, take it easy, guys.